This is the 22nd installment of the series Build Your Business into an Asset of Value. An angel investor is an individual, not a business, who seek investments in private businesses as part of a larger investment portfolio. In Chapter 20, I proposed that a better way of thinking about building the value of a business is to start the journey by identifying the type of buyer that is most likely to pay a good sum of money for the business. After identifying the ideal buyer, the business owner may then consider what business characteristics will attract the targeted buyer and embark on a mission to build the business into an attractive asset of value. I consider the nature of the business, the buyer, and what business characteristics will be most attractive to potential buyers. I propose 6 types of potential buyers: owner-operator, which I dealt with in the previous chapter; angel investors, the topic of this chapter; venture capitalists; sell the business backward, forward, or sideways. In the previous chapter, I looked at owner-operators as potential buyers, but in this chapter, I consider angel investors. What distinguishes an angel investor from other potential buyers? What business characteristics is an angel investor looking for in a business? And what type of business is most suited for this type of transaction? The buyer, an angel investor. Angel investors are not interested in a job, obtaining an ownership stake in a business and then working in the business as an owner-operator. Angel investors are wealthy individuals, often senior people, accomplished entrepreneurs, building their wealth by actively investing in a variety of assets, of which investment in private equity is just one aspect. Where an owner-operator takes on an ownership stake in a business with the idea of applying their skills to generate earnings, an angel investor seeks investment in a business with the objective of making a capital gain. Although angel investors are usually patient investors with a long-term perspective, a clear path to exit remains a prerequisite when evaluating the prospects of acquiring an ownership stake in a business. Business characteristics. Angel investors are willing to accept an organic, slow and steady growth strategy, but will only consider investing in a business with a clearly defined strategy that creates value for customers, suppliers, and ultimately shareholders. A business with a clear competitive advantage, an aspect that makes the business able to dominate its sector or geography and its competitors, with a business model built around a value proposition, with competent people and established processes. A business with a track record of consistently growing earnings at least 20% per annum or more. A business with a diversified customer base, a business with little or no debt, a business where there is scope for growth in a market with good prospects. The challenge. According to the latest report by the Southern African Venture Capital and Private Equity Association, capital invested by angel investors represented less than 4% of total capital invested in private equity for the previous year. There is a very small market of angel investors in South Africa, and they are spoilt for choice. To secure capital from angel investors in a ferociously competitive marketplace, the business owner must present a business of outstanding quality with superb growth prospects. The nature of the business. An angel investor is looking for a business that is operationally and financially independent of its owner. The last thing an angel investor wants is a business that requires an owner-operator. The business must function independently. According to the latest report by the Southern African Venture Capital and Private Equity Association, the information, communication and technology sector, ICT sector, secured the lion's share of private equity investment, followed by healthcare, business products and services, and consumer products and services. That is now for the year 2023. Needless to say that angel investors seek opportunities in growth sectors. According to the same report, the average deal size for angel investors in 2023 amounted to just over 6 million rand. I think it's fair to conclude that angel investors consider investment opportunities of between 5 and 10 million rand. In conclusion, to secure capital from an angel investor is akin to selling high-end super luxury cars to wealthy customers. The business owner must present an excellent opportunity, a track record of consistent earnings growth, a team of competent managers, refined and efficient business processes, a business operating in a marketplace with good prospects for growth. In the next chapter, I will consider venture capitalists. Thank you for watching. To access the full series, visit Constructum Online Learning on YouTube or click on the link in the post.